Okay, 75 points lower on the Nifty, 11,590 is where we are at. Let's talk about the mutual fund data for the month of March, which actually is not bad at all. It's actually pretty good. In the month of March, equity schemes took in the highest amount of money that we've seen since October of 2018. The number is 11,756 crores. So let's pick up on that number and take it to our guests who are joining in. Sunil Subramaniam is with Sundaram Mutual Fund. He's Managing Director and CEO. Swaroop Mohanty is CEO at Mirae Asset Global Investments. Gentlemen, thanks very much, both of you, for joining us here. Sunil, thank you. First up to you, is the inflow which you're seeing up in the month of March, I mean, a reflection of how the market is also done? Because markets did pick up in March and towards the end of Feb. So it's what follows. I mean, does the returns come first or the flows come first? We can argue endlessly, but is that the main reason?
I think it's also the return of the risk parameter. So if you look at it, the flows had slightly tapered down, partly because of the uncertainty around the political outcome. And I think post the event of Pulwama and the response, I think both the market respected risk and the investors are also now more comfortable with risk. So I would say that it's a positive sentiment going forward which has driven the flows in, rather than a past returns improving. In fact, the past returns improving has also led to a spike in redemptions. There was a 53% rise month on month in equity redemptions. So older investors who had seen a little bit of erosion in their value, when they came back, they also have redeemed. But far more money has come in, because, and especially I would say that the recovery in the mid and small cap indices, which had been under pressure for a long time, with the return of risk and the recovery in the mid and small cap, a lot of smart money, I think, has moved into specifically mid and small cap funds in the last month. I think that's my take on it.
Hi Sunil, Swaroop, good afternoon to both of you. Swaroop, I wanted to ask you as well about the trends going forward, because in SIPs, finally we're seeing a bit of, they're coming off, albeit marginally. Is there a fear that we might be seeing redemptions in, the SIP category going forward? I mean, given that any stoppage will only sort of reflect in another 2 or 3 months.
Sumera, I don't think one should read much into that small blip between 8095 to 8055 last month, because it's coming off a period which you cannot ignore, that there is a certain adjustment in the remuneration of the distribution where the upfronts have been taken away, which used to play a fairly decent part in the SIP inflow. So I'll read more into that than a blip in the SIP. In fact, SIP investors in the last month would have seen a huge upside due to the correction in the market and the upward correction in the market. And I don't think the SIP figures will look back. I was a little surprised with the blip, to be very honest. Mid-month when we had chatted up, I had predicted that to be higher, which I am wrong, but I'm very happy to say that I'm very correct on the end result of the month, because 9,000 odd in equities and 2,742 in ETFs is something which is fantastic to end the month with.
Okay, Mr. Mohanty, on the liquid funds category, what do you make of the big number, minus 51,000 crores?
I think it surprised me positively. It should have been higher. It's the year end and some amount of the institutional money goes out. But 51,000 I think is a good number for the industry. It should have been higher, but I'm very happy that it's just that money comes back in, should have already come back into the system.
What is the categories, the total size of the category, Mr. Mohanty?
On the liquid fund?
Yeah,
just give me a minute. I'll have to check that out. I mean, if you look at the overall industry, the liquid fund today would compromise from an AUM perspective.
I remember a few months ago it was about, I think, 2.5 lakh crores, right?
Yeah, that's where it stands. More or less it stands there only, 2 lakh odd.
So you're saying that you would have expected a much larger outflow?
Yes. See, all the institutions at the end and just go out and come back. It's a book entry which comes, and that money would have come back. But I would have expected a far larger number than this.
Okay. And Sunil, one final question on the balance funds. We had expected that outflows would continue in this category even into this month. But do you think this 3,000 crore number is surprising? I mean, surprisingly high?
No. I think it's roughly similar to last month. Last month was 2,600. This month is 2,900. So it's just a 300-400 crore rise, whereas the redemptions have almost doubled from 3,600 to 6,000. So, like I said, I see this as a move to risk. So even money which was in balance fund, right? I think if you see the shift out from arbitrage and balance of about 7,000 crores, as it correlates with about 9,000 crores positive in general equities. So I would say that there is a greater comfort with risk, and balance is essentially a lower risk category. And consistently over the year, we've been seeing month-on-month redemptions rise higher and higher, and that's true this month too.
Okay, gentlemen, thank you very much for joining us, Sunil and Swaroop. Appreciate both of you joining us with some of that sort of commentary and color on the numbers that we've seen in the month of March. Well, just take note of markets briefly, 80 points lower. So it's essentially been making lower lows all through the 30 minutes here on this edition of Midcap Radar. The Bank Nifty is also making newer lows. It's down 0.8% now, so another nearly 0.25% cut since the last I looked at it. Yeah, I mean it's looking there is pressure which is starting to develop in a bit more serious fashion. Maybe we could look at I'll just look at what's happening on the Nifty stocks, and maybe we could look at Europe as well. Maybe the pressure there is intensified. But Indiabulls Housing is the top loser now on the Nifty. Is followed by IOC, which is down 2.8. Vedanta is down 2.5. Bajaj Finance, GAIL, Adani Ports, BPCL and RIL. So a lot of oil and gas stocks. There is metal stock like Vedanta, and then there is Indiabulls Housing, which is under pressure at this point. I think only about 8 or 9 Nifty stocks are higher. Everything else is down and out. The top gainer is ONGC with about 1.6%. It's followed by Mahindra, which is up about 1.25% or so. Europe is, I think, still down. Yes, DAX is down a third. FTSE is down a quarter plus. CAC 40 is down. So broadly, I mean, the Euro 50 index is down 0.3%. So it's not, the cuts have not become bigger, at least not yet. Well, it's a wrap here in this edition.